Getting a microloan in Kenya today is as easy as a few taps on your cell phone. That's because the growth of mobile microloan apps in the country is unrivaled, piggybacking on the growth of mobile money, with almost 1 trillion shillings moving through the country's mobile money platforms in 2016. Telecom giant Safaricom and Commercial Bank of Africa were the pioneers, launching a mobile-based loans and savings platform called M-Shwari 5 years ago. Today, smaller brands like Tala, Saida, Branch and Mombo are struggling to carve their own niche services in the sector. And one such firm is Alternative Circle, creator of mobile-based credit facility app called Shika.
Right now in Africa, it's hot to be doing fintech. And so one of the things we decided to do was to position ourselves globally. We learned that we should be targeting to raise not $100,000 or $150,000 like some of our peers were doing, but go for the big $1 million figure. I've literally pitched 150 times, if not 200 times in the last 3 months. The idea was to build a platform for financial institutions like banks, microfinance institutions, credit-only institutions, to give money to lend, to micro-lend, and then we sort of share part of the return. Having worked in the space, I did realize that a lot of products in the market were not being driven from a customer's point of view. And so the first thing I identified was we need to design an app that is not only beautiful, but very easy to use and has very few functions. One of the key differentiators in our app is that other platforms, for every 10 people who download and ask to borrow, 3 get a loan. Ours, it's 7. The target is 7.
For players like Alternative Circle just entering the market, partnerships are now forming around the need for more data, and that could reduce risk for the lenders. The company is set to launch Shika this year with the help of $1.1 million from international credit risk management company Credit Info. A partnership, it says, will redefine the way risk is evaluated in Kenya.
Their interest in the business was they liked the way we were playing with the algorithm and the data. Because they're a data company, for them, they want to understand how they want to have a richer database or data source on individuals, because they already do have a lot of data on individuals because they are a credit reference bureau. So this innovative way of looking at data and giving a credit score could work in other markets. And so we were really attracted to them because not only were they willing to give us the cash and the financing, but they were willing to partner with us to enter new markets.
Mobile microlending is slowly becoming a necessity. Not only is it quite popular amongst the poor because of its easy accessibility, shorter-term payments and fairer interest rates, but commercial banks in Kenya are warning that lending to the private sector, especially the SMEs, is likely to slow down further this year, mainly because of high credit risk brought about by last September's interest rate caps. Uche Okoronkwo, CGTN.